Scott Riley, the market update desk, August 4th, NMLS 157524. Wow, the big bang of last week's data dump and the seismic shift in the BLS with the firing of the current BLS head ended up being a very busy week for us trying to get as much information out to you as possible as quickly as we could. So, last week we had all the economic data that moved us significantly better on mortgage-backed securities and 10-year treasuries. We broke through some resistance and looks like we held it at the end of the day on Friday. I want to take a minute about everything that's going on now with the late Friday, early Saturday termination of the head of the BLS. There's a lot out there being talked about, and I'm only going from a business perspective and competency perspective. So, could it have been done in a different way, different fashion, different commentary? Yes, no denying that. But I'm only looking at the facts part of it when we're discussing this. So, last year, 2024, the BLS reported pretty much close to 40% more jobs. I'm sorry, close to 50% more jobs than what were actually created once they did their true up and analysis for the entire year. That's significant when you look at the data integrity component of what we're talking about. This is what the market trades on. This is what the world relies on for our accuracy for their trading with everything that goes on in the financials. And we were off by almost 40 to 50% on jobs numbers last year from what was originally reported. So the integrity of the data is where I'm coming from. If you were a CEO of any company or an employee of any company and you were off by 40% of your numbers, that's a problem. And you likely wouldn't be there anymore. So that's where I'm taking this from. And how do we get better data? Some of the maybe more simple ways of starting to look at this is reduce the weighting of the imputed data that the BLS uses in multiple reports. So, for example, on the CPI inflation, that relies on 44% of that weighting is strictly housing. It is shelter costs. But within that is the OER, owner's equivalent rent. Now that makes up a total of 33% of the total CPI inflation, but that relies upon phone calls to homeowners and asks them, if you were to rent your house, how much would you rent it for? The issue there is how many people accurately know what their home actually would rent for in the market. Even if you're a seasoned professional, it's a little bit of it could be a big guess because there's always a predominance of someone to think their item is worth more. Just like if you're selling your house, you likely have a higher opinion of value than what the market does. So one idea is reduce that component, that weighting. It's a pretty simple idea, but it has relevance. So maybe take that from 33% down to 15% on owner's equivalent rent. Take shelter costs from 44 down to 30%. Maybe more accurately show what is actually out there, and maybe we get some better real data. In the birth death model for the jobs report, boy, that is a monstrous weighting. And the imputed data is so far off on every report. And that's why we get these consistent revisions of sizable numbers. It's not just this last report. The average revision for just 2025 is minus 77,000 jobs, each and every report. This goes back many, many years of the revisions, not to the extent of 77,000, but the errors, the incorrect data that's being initially published is the heart of the problem. Maybe bring that birth death model down to maybe 15% of the total numbers. That's a better indicative, and it maybe shows or takes into account the challenge of computing that. It doesn't rely so much on it. So those are a couple things I wanted to talk about regarding, the BLS. Borrowers are affected by this. You might be paying a quarter percent more, 150, $180 more a month in mortgage interest than you would have if these numbers would have been correct. And that's a big thing. Let's say you've got that mortgage for 7 years at $180 a month. That's significant money to you. So that's why data integrity is so important and it's so critical. The market relies on this, and we have not been getting accurate numbers for a long, long time. It's not just this report, everybody. So other things going on today, it is a weaker data week, which is nice because we got really tired last week crunching numbers. Mr. Gibson would have been really, really tired and would have gone through a lot of pencils if he were still around. So we do have one thing that popped up. Governor Adriana Kugler, she's a Fed governor. Her term ends February of 26, but she decided to take a university job, and she's going to be vacating that position. So the next meeting, we're going to have one less governor vote, and then they're going to be replaced. So where we go for the potential next Fed chair is going to be really potentially this could be really telling, because anybody that is nominated for a Fed chair has to be currently on the Fed board. Now, Waller's already there, Bowman's already there. Besson is the Treasury Secretary, so he could get put in. So one that's not there is a former Fed member, Warsh. I have a feeling that the nomination is going to go to Warsh. He's going to be on the board, and it's going to be a horse race between Waller, Warsh, Besson, and an outside chance Bauman, but I don't think so. So that's going to be very telling. The market could actually get a bounce from this. If the market likes what they're seeing and who the nominee is, we can lose ground if the market doesn't like it. So another report came today with Truflation. It's much more of a broad analysis of inflation across many, 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 many more data points than the CPI or PCE. This showed that inflation fell from 2.04% to 1.65%. So it shows that the impact from tariffs is not there, and it had been overstated in the commentary of what people thought it was going to be. We're sitting on a very important resistance line for the 10-year Treasury. It's sitting at 4.201 right now. If we can break through and stay, we're going to be down into the 4.14 area. And then if we can break that line in the coming months, there's a chance we could see 4% on the 10-year Treasury. So we've had a great run. It is a great time to take advantage of these rates in market. Give us a call, 616-293-2189. We hope you have a fantastic afternoon.